Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Figuera. Let's first take a look at the main stories for this week. Moody's to review Sri Lanka for upgrade. Sovereign bond exchange program kicks off. And policy rate cut as new indicator introduced. A look at the main story this week. In a significant development, Moody's Ratings on Thursday announced a review of Sri Lanka's long-term foreign currency issuer rating for a potential upgrade. Currently at CA, the review reflects optimism about the government's efforts to restructure international bonds held by private creditors. If successful, this will significantly reduce the risk of default on both current and future debt. The outcome of Moody's review will depend on the completion of the exchange offer and clarity on debt restructuring. Sri Lanka, which defaulted in April 2022, has been implementing IMF-supported reforms to address external vulnerabilities, improve liquidity, and enhance debt sustainability. Moody's review follows Sri Lanka's debut of its international sovereign bond exchange program on Tuesday. The Finance Ministry urged all ISB holders to participate in the exchange process, ensuring the best outcome for all parties. This follows a deal with private bondholders on September 19th, where an agreement was reached to exchange existing bonds for a combination of governance-linked and plain vanilla bonds with a baseline haircut of 28%. The haircut will reduce the debt servicing by around $9.5 billion. The local consortium of Sri Lanka, comprising domestic commercial banks and financial institutions, said it will fully support the restructuring plan. Local holders of ISBs accounting for about 12% of the stock have the option to convert around 30% of their holdings to rupee bonds and the rest to their new dollar bonds subject to a 10% haircut. Just ahead of this development, the IMF too approved a staff-level agreement following the third review, where the government agreed to adhere to the main guardrails of the program. This awaits IMF Executive Board approval likely in January next year, on which the third tranche of $337 million will be released. Also on Wednesday, the Monetary Policy Review Board at the Central Bank of Sri Lanka cut its policy rates by around 50 basis points and introduced an overnight policy rate, replacing the current policy corridor as recommended by the IMF. The new rate is slated to help support economic recovery, convey signals, control inflation, and boost private credit. The overnight policy rate has been set at 8%, 75 basis points lower than the midpoint of the old policy rate. Following this, the OPR will serve as a primary tool for policymaking, while the standing, lending, and deposit facility rates will be linked to the OPR at 8.5% and 7.5% respectively. The CBSL also mentioned that inflation will continue to be deflationary in the coming months, although it will turn positive and align with the medium target of 5% by mid-2025. In October, Sri Lanka's consumer confidence, as compiled by the Institute of Policy Health Studies, reached an all-time high, surpassing the previous record in June 2024. It was noted that all the sub-indices that make up consumer confidence rose during the month. This was mainly due to improved perceptions on personal finance and the country's financial health in the long and the short term, although consumer buying conditions remained relatively unchanged. In our weekly tourism update, in the first 24 days of November, over 145,000 tourists arrived in the country, bringing the year-to-date total to over 1.75 million. Daily arrivals rose significantly to 6,070 in the month, from the 4,384 recorded in October. India continues to be the primary source market, followed by Russia and Germany. The SLTDA aims to welcome around 198,000 tourists this month. The all-share price index at the Colombo Stock Exchange regained the 13,000 mark, despite some profit-taking by investors. The market has gained nearly 2,100 points since the September presidential elections. The current two-year high index is expected to test the all-time peak of 13,590 recorded in January 2022. Despite profit-taking, turnover averaged to 3 billion rupees, with banking stocks driving momentum. Following the interest rate cut at the Treasury bill auction held on Wednesday, yields on all maturities significantly fell. The 12-month yield was down the most by 70 basis points. 355 billion rupees were received, of which 125 billion were accepted. The Sri Lankan rupee appreciated for the second consecutive week, with the central bank's indicative mid-spot rate ranging around 290 to 292 rupees. So far this year, the rupee has appreciated over 10% against the dollar, making it one of the best performing emerging market currencies. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.